I had an epiphany not long ago. It took place during a dinner conversation at a massive investors' conference in Hong Kong. Over the course of 5 days, some 1,300 investors showed up, along with another 500 top corporate executives. The former president of Pakistan, Pervez Musharraf, spoke about his country's role in the global economy. Historian Simon Schama discussed the United States' current position in the world, and film director Francis Ford Coppola flew in to talk about the importance of narrative. Asia's economy was sizzling, with a growth rate 3 times than that of the United States, creating 1 billion more middle-class citizens. And this event was at the epicenter of that growth. Evidence as to why China would likely overtake the United States as the largest economy within a decade was on full display. Perhaps this was why my daughter was being offered the chance to learn Mandarin in her New York City school. But what really stood out for me was something someone said over dinner on the first night I arrived. I had just come off a 16-hour flight from New York to Hong Kong, one of the longest non-stop flights in the world, and was dining with about a dozen bank analysts from major Asian countries. We were at the Dynasty restaurant, which has a Michelin star and spectacular views of Victoria Harbor, though I was too jet-lagged to appreciate the scenery. Over the 10-course meal, we went around the table and discussed the current prospects for banks in our specific markets. This was the real point of the meal, to share information. And in this way, we were acting as unofficial ambassadors for our home countries. The Japanese bank analyst talked about how that government's policies had allowed banks to continue lending to corporate borrowers, even though those companies, and many of the banks themselves, should have folded years ago. They were zombies, the walking dead. The Chinese analyst talked about how his country still had tremendous room for growth. Consumer credit in China, as a percentage of the overall economy, was only about 1/5 the level in the United States. The ride would be bumpy for investors in Chinese bank stocks, but the long-term prospects were very promising. Next, the bank analyst from Korea spoke, then Thailand, Indonesia, and so on. I knew my turn was approaching, and I started thinking about what I would say.